Okay, good morning, guys. Just let me know if you can hear me. Otherwise, I'll just get started. Rip into it. Okay, I assume we'll be good to go. Welcome to Trade Setup. It's the overnight review. So I thought I'd do one this morning. We've had a bit of movement last night in the SPY, sorry, in the Dow, and the SPY has been taking, well, the ASX has been taking a bit of a battering last couple of days. G'day, Andrew. So yeah, it's good. We'll just have a bit of a chat about what could be happening coming into the weekend. Now you've got big numbers out tonight. US payrolls, employment data out. Now they're expecting that. I think they're 3.5 to 3.6% unemployment. So heading up, and they're pretty much at full employment at the moment, and their new jobs are expected around 90,000, which is, when they're talking and a good expansion in the economy is around 200 to 300,000 new jobs. They're only about 90. It's showing that it's maybe the labour market. Well, you would expect it to. It's such high employment. You expect it to slow down a bit. So I think and with what's happening, their overall theme on trade, they're talking up the phase one deal, but at the same token, there was news out overnight that's concerning people or concerning traders that trade's rearing its ugly head again. Trade with China saying they're talking down a longer term deal with the US. They're saying it could make it very complicated or a comprehensive deal maybe off the cards. I can't remember the exact terminology, but either way, it's capped the market. We had some good earnings out in the US and it was still down on the day. And that good earnings has sort of been the key focus the last few sessions, which is driving the market higher. But that turnaround or the turnabout in trade or trade talk narrative has turned negative again. So I'm always suspect in things like that. You've got to try to read between the lines. So one, you had them talking up a trade one day, and they've never given a date. They said, "Oh, it could be due. We expect to sign it in Chile, whatever it was in Chile, on a certain date." And then that buoyed the market, and then saying, "Oh, it's all going well, but we may not be able to put it out at that date." You go, well, what's going on here? You've got to always question why. Why is it that hard? It means that they can't. Maybe they just can't come to terms. Maybe there's never really been a phase one trade deal on the cards, and it's just talk to try to buoy that market. But it seems to be that both sides have agreed that it's happening, and now they're sort of. And then Trump had to fight back last night with, after those, I think it was a Bloomberg report about China not looking towards a comprehensive deal. He fought back, said, "Oh no, we've got a date for the phase one. Keep supporting the markets." And then now he's also talking up again further rate cuts to buoy the manufacturing and the economy. Which last time he's doing that is because he's expecting a bit of pressure on trade. So I'm always suspect when he starts trying to pressure the Fed Reserve for further rate cuts. They should be cutting more, support the US dollar, drive the US dollar down to support manufacturing. Then I'm going to suspect that something's going to come out of the wings, negative on trade, and it's going to drive the market down because his main focus is to keep that market buoyed, to drive it higher into the 2020 elections, and you can tell that with all these tweets that he's been, putting out there. So that's what's got me a bit suspect about it, and I think the overall market's they get a bit impatient towards these things. And what is it? So the US dollar, with regards to that, you can't have both. If the US dollar is moving down, it's got to be a strong economy. Because of rate cuts. But traditionally, you cut rates, people are looking for yield. They're going out of a lower yielding currency into something else that's higher yielding, but they're not. That is the highest yielding currency, the US. So that's where are they going to go? If you're trying to get a yield of 3% or 2%, I think, whatever the US rates are, and they're cutting them, you're going to be pissed off going somewhere you want more than that. But you can't. Europe's lower, they're negative. Australia's not. It's not going to happen. So couple that with the US being a safe haven currency. At the moment, I think I found some facts that from the start of the year till now, they've cut rates 3 times, and the US dollar is roughly in the same spot. It hasn't gone down after what you would expect after 3 rate cuts. So it's just going to show that the US dollar is finding a bid or finding buyers, because who wants to hold euros when there's no growth in the European region? Why would you hold euros or the pound with Brexit when you can go into the US dollar when their markets are going up and they're going up strong? So why would you? And when you can get a better yield on US dollars, so it's just a fact. So if he starts, the only way you can get sudden cuts for no real reason, but employment's actually quite strong. Like we just said, full employment. So really, the only way he's going to get that US dollar is going to solve his problems is by finishing trade, coming to a deal which he can't do, which he's finding hard to do. They can't come to some sort of agreement, and he's going to have to, I guess, bite his tongue, or he's going to swallow his pride to do that too. And it's going to be not what he wanted, what he's always spruiked they're going to get for the US. So, yeah, he's got a few issues, and I'm a bit concerned about the trade. News flow is going to be a bit more negative than what we expect. So either way, you can see that reflected in gold. Gold rallied. So we'll start off with gold. That's not, here we go. Taking a look at gold and currencies. Actually, gold is here. No, I want it here. It's probably better. Yep, and then we'll take a look at the index. So this is gold futures. We've talked this up for a rally for a while now. Looking for a rally, looking for that support around. You can see we call it the bid zone. So this, I'll have to go back a few hours. Let me just go back to a 4-hour chart. Let me just get all that out of the way. So you can see there's been, from the rally that we had recently, the strength in the rally, we had the gold pushed up. It got to highs. It tried to go here. It failed to get through the highs significantly, so it had to back off. First port of call is your previous high or low, which is around that 1500 mark. So we can see it tested down there. So that's your first leg down. Then we reacted off because you've got all these people that have built up. They've had a crack at it. If you've missed it, back here when you get a better price, you're going to go, okay, we're going up. We're going to the moon as the bulls are talking up. $2,000 on gold. Of course, it pops up, and then you get that second wave of selling because that is weakness. Once you get the market that can't get through the previous highs in a strong fashion, then that's going to be signal to anyone that's been buying it through here or even earlier, been buying gold and sitting on a handy profit. You don't want to see that evaporate. So they're going to be the first ones to get out, or even the people that bought it late into that trend. That bought it here expecting that break to continue on up to 1600. It didn't, and it failed pretty much straight away. They're out, and that's what triggers selling. Then you get that move down. That anyone that's bought it sort of through here around the 1520 mark, in that chop in there, they saw it pop up. They're looking to go again, and it fails. They're going to be thinking twice about holding, and then that just moves back down the line. All right. So once you get that pop, that's just your latecomers to the trend that have waited for so much confirmation that they're finally going to pull the trigger and jump into a position. They bought it, and then bang, it turns around, and that's why you get these little bounces. That it's going to you're going to get a reaction off a certain level, and a lot of the times it just doesn't come blasting straight through and break that, especially when it's been such a good uptrend. It doesn't break your first level of support straight away. It will probably react off it, and the fact that it's actually down there is cause for concern. So you do get that initial reaction, and then you get, if there's going to be further selling, it'll come in, and that's where you're always looking for that lower high. So that's what we got, pressed down, and that secondary level down took it down to about 1466, 67, where it started to get buoyed again. And what we're looking for here is if it can start to hold a higher low, which it has, at 1485, around the 1500 mark, give or take, build that bid zone or hold that bid zone. And you can see recently it broke up out of contraction, and that's contractive lower highs. It's broken up, come back down and retested the bid zone and started to lift again. So we're starting to see it's either going to consolidate between the bid zone of 1485 and 1524, but either way, I don't think it's bearish. I think gold could start to find a bid, and if we're looking for now a bit of a pullback and start to hold some higher levels at 1500 say, I think that's going to take you through 24 up to 65. So I think gold longer term for me, especially if things start falling apart on the back of trade, gold's going to be bullish, because we know there's every reason why gold should be higher and should find a safe haven bid. You've got a lot of problems. The Eurozone is not growing, it's shrinking. The US is actually, their economy is slowing. It doesn't matter where they are in price, the market will be all-time highs. It is still slowing. So that could fall apart really quickly. I'm not saying it is, but it can fall apart really quickly. And if it falls apart, watch for gold to rally. And if you've seen early signs where it's starting to find a bid on gold, we're looking to some gold gold producers at the moment on the ASX, or just physical gold, looking for an entry into physical gold. We had a buy alert above here, which never got triggered, probably a bit early. But the more time it holds that bid zone, the more time it spends building that and holding it, the more I see a rally on the cards. Okay, so we're more bullish on gold than negative, and that, I guess, flows into the ASX. Now let's just look at the XJO or the ASX now. Andrew, what do you trade mainly? We'll just go over that if you like. But this is the overall. I'm just trying to get a feel for the overall picture. So what we're seeing on the ASX, we're looking at this contraction. So you got lower highs, higher lows. Okay. So if it broke up, which it did, it broke up recently and pushed through 67.40. That was a bullish sign. But the fact that we're backing off from that level is, I don't think it's too pretty. So if I just go and actually, let me just clear this whole chart and we'll start drawing it up again. So we had this contraction lower, but now what we're finding is potentially an offer zone starting to hold at around 67.60. So, and if that holds, then we'll be looking down to the first port of call is really that level. So I think you've got a couple of levels that are key at the moment. Just because we started to break that, up and out of contraction doesn't technically mean that you're going to rally, to high heavens or going to charge out to the highs. You need still to hold higher lows. And this kind of correction over the last few days is leading me to believe that, look, that offer zone might be in the sand at the moment. And it might be that, whoops, just get rid of that. Sorry. I'm not the master of this program. But the fact that that's starting to hold, we could easily start to drive lower. And what I don't want to see, if we're bullish, I don't want to see a breakthrough there and then start to hold. Something like this, I think that's going to be, then what you've got is what highs here, then you've got lower highs coming into play, and that's all part of a major lower high at this zone. I'll draw it like this. Actually, no, I won't. Then you've got this major lower high coming into play through here, through the offer zone. And then if you get a lower high coming in again, I'd be looking to sell this market short, especially if you break through 66.14. I'll be looking for a short. I want to see if we see this action break down through and then pop back up and we start to hold a lower level below 60, say. And, taking into account that all this, after this corrective action, there's no reason why this is your one move down, secondary move up, and you're heading down to, lower levels, and you're doing this kind of price action where it really starts to fall over. It's pretty much what we got. If I can draw it up, is what we're looking at here. A move up and then a move down south. So that could be on the cards if we start to break down through this 66.20, say. Does that make sense? So just be aware of that and keep an eye on the ASX. That's what I'm looking for. And we go back to looking at some of the currencies. The US has been a safe haven bid into the yen. The yen has been, the yen itself has been bought up, which means, and the US dollar still edging lower. But you can see by the yen getting bought up, the market's just collapsed. It's just sent the pair down. Does that make sense? So that safe haven yen buying is sort of outweighing dollar, US dollar selling. Just if it all stays even, the US dollar gets sold, the market, US yen heads down. If the actual dollar's going up as well, sorry, the yen's going up in the safe haven bid, it just exacerbates that move. So there's been some safe haven yen buying, couple that with gold safe haven buying. There's still some uncertainty out there. If you just go through, this is gold here, that's starting to tick higher. We've just spoken about that. The UK doesn't look too pretty at the moment. If we go and look at, we're on a daily here, that UK index is still what we're saying. You got a lower high here, so the market's pressed right down, popped back up, built a lower high, starting to fail, got some lower highs, so there's pressure coming into that. If it starts to break through 70.30 on the UK index, then I reckon this is going to be all part of one major. You're looking at 1, 2, 3. Well, I don't know where that's going to take us because it's off the charts, but you can extend that a lot lower. If that's the case, you're looking at, say, 6,000. What are we, another 1,200 point drop on the FTSE? Not looking pretty. So I don't want to scare anyone, but that's just there is some, the potential for downside moves off here. Just because we've been heading higher in the US, it doesn't mean anything. Earnings is not as bad as what we thought. So earnings was expected to be down 3% across the board. Now it's down less than 1%. They've been better than expected. Again, that could have been because the bar's being set so low. It wasn't hard to beat, but still they're lower. So yeah, that's it. Let's just see where the ASX is open. We're down 20 at the moment. The SPY did bounce a bit just on the open. You can see it sort of popped up, and that's just probably clearing the way for some clearing some of these shorts. Sorry, the longs that are built up. Sorry, what am I talking about? The shorts that are built up on the downside, especially late. You can see on the wrong chart here. Let's just go to the 30-minute chart. This move down has been quite solid. You really expanded yesterday into the close, or expanded. It just bounced into the close, but that expanded lower. And then you get this kind of price action coming into that support around 65.94. You do expect that to run out of steam on the sell side. There is still quite a few sellers built up on this leg down. So you could easily get it pop up just to clean out some of those sellers and then drive down. Now, if we hold a lower high, go down to the 5-minute chart, if we hold a lower high around 66.26 and start to chop around here, let's just draw that up. We do this kind of action, then that could take us down into the close. I mean, not saying that could happen. It could easily happen if we start to really fail below 66.26 and we can't break up through there. So what you want to see, if you're bullish, you want to see pressure put on the short side and start to get a squeeze. You want to get them squeezed out. If they don't get squeezed out, they're strong and there's selling still to come into the market, and you're looking for your lower highs to pressure the market lower. Okay, if we start to hold up here, just so we start to pressure down and you start to hold a bid, that may take us to squeeze that 66.26 level. So look, we'll just see how it goes. That's what I'll be looking for. I haven't traded the last few days, been quite busy, but there's been plenty of opportunity to get involved. So that was where the market opened. There was opportunity on the short side here. When we found a bit of a bid, an offer, pressuring the market down. It held here, that led the market lower, and then you had opportunity to sell on the short side as well, which turned out really well. I think the day before there was some opportunity too. I don't know what that was. That was, just find it. I think it was somewhere, here we go. So that was the offer where we opened, tested up, washed out some buyers, popped back up, retest, and then started to fail. This was your prime zone on the sell side. Stop there. Come on. So that was your prime zone to start to look for a short opportunity. Even a bit later on, you had selling opportunities there, which took you all the way down into the close. Actually, where did it close? Yeah, so the close was down. It was on its lows. So there has been opportunity. We'll see how today goes. It looks like it's driving back down to the overnight lows. We'll see if they can find a bit. It may drive right down into that 94 zone, into the support zone here. Look on the 30-minute chart, it could just drive down and then start to find a bid. We'll have to wait and see. So I think we'll just see how this market opens. We're expecting it down 20 to 25 points, and it's down there now. It's down 28, so it's not looking too great. There might just be a lack of buyers that want to, especially after the move down the last few days, especially on the open, how we say retail opens, professionals close the market. If that's the case, then there might be a bit of fear out there. You've got jobs numbers coming out tonight, which they might be a bit concerned about, and they don't really want to hold long into that. Rather give it the weekend. If it turns out all right, then you can always go and buy on Monday, especially after we've had a good couple of days down. So we'll see what today brings. It might be a relatively flat day going into the weekend, but we'll see. G'day, Laurent. So we'll see how that plays out. Any questions there, guys? We haven't got anything on the cards. To be honest, we've got TNE. If the market's going to turn south, I don't think that's going to trigger, but I don't mind that for a bit of a pop if you can get it through 75. And it has to be off a high low. I don't want to see it test 7 and then start to buy through 75. I don't think that's the right. We'll cancel it that way. It's probably not far from being cancelled if I remember. TNE. But we'll see how that goes. And then ABP is doing okay. I don't like how it's open down here. We might cancel that alert. That was through 406. I don't think that's going to happen. I think that's looking more negative or bearish than anything else. And TCL's being one that, look, that could trigger. It keeps washing out the lows and then holding. Sooner or later, that's going to trigger through 1510. and I would expect that to take off. But if that pressure gets contained around 15 and just can't get through 15, we might cancel that. Depending on how today plays out, you can see on the weekly it's starting to hold. The weekly's starting to hold a higher level in here. You can see this high low as opposed to this big washout low on the weekly. And on the daily, you can see it's clear washout there, straight back up to 15. You know, kept pushing down, kept flushing down, and it's getting supported. Now, if this goes off this higher level, it's straight through now. We'll be entering that, but I'll just keep an eye on that for the next day or so. But that's it. That's it for us. Perseus has just triggered a partial exit, I think. Am I right or wrong? It might be 89.5. PRU. 89.5. So we're within striking distance of tagging that 89.5. I'd be happy to take it off here anyway. If you're watching Laurent, you've got Perseus, I'll be happy to book some. I wouldn't want it to, back off like it has the last few days. I want to see it pop up. I want to see it test 90. It is extended up here. Both, the daily's getting extended. If it can blast through 90, great, so be it. But I'll be more than happy to take some off around 88, 89. Take a partial, and then we're probably going to raise the risk to about 80 on that. Yeah, that's a bit. One thing I will probably talk about, I think it is, I'll talk about this Monday. So if you're in Andrew Laurent on Monday, I'll talk about this. It's RBL. It was a good example of why don't trade what you think, trade what you see. And if you don't see it negative, don't take your foot off the pedal. And that's what we did. I basically did that on RBL. Took a partial, did okay, got stopped out for a small gain on the second half around 142. And that was just above this higher low. And then look what happened after. Soon after that, straight through 150, and we're trading up to $2. So that's going to kill me. Lauren, did you take some off on Perseus? Is that Perseus you're saying? Because if you still got RBL, legend. So yeah, that was, it's gone from, say, a 10% gainer to a 40% gainer right up here. So I think I'll talk about that on Monday a bit more, but it's really important to follow, once we got the partial off at these highs at around the 24th, I think the 23rd, our stop should have been around the 125, should have held 125. So let it back off, let it build a higher low and go again. As soon as it confirms with a move through 57.5, that's when you raise it to 135, to your lower high. And that would have kept us in on the second half. But instead, I was thinking we're going to get a pullback. Good. Okay, you've done well, mate. You've done well. So yeah, that was a stupid move on my behalf. I admit that, but yeah, we'll live and learn. So we'll chat about that Monday. All goes well. We'll see how we go today. Market's down 24 at the moment. I don't expect when we could be supported. We might be supported on the SPY. Just keep an eye on the SPY. If you look at the ASX, keep an eye on the SPY. Just see what's happening on the SPY, because that's what's going to trigger. If that starts to get supported down there, we'll look at the STW to get supported, because the SPY's used as a hedging mechanism. So anyway, guys, have a good day. Have a great weekend, and we'll speak to you again on Monday. If you've got any questions that I've missed, anything I've missed, just send it through to support@tradesetup.com.au. Cheers, guys. Have a great weekend. I'll speak to you again soon. Bye.